Hello and welcome to another update video about ADA. It is one of these boring phases again in the market. Not much is changing at the moment, but it still is important to, I believe, follow the price structures, levels, because if the price suddenly starts to move, then it will be very, very fast. What tends to happen when there are these rapid movements, people tend to miss it because they haven't prepared for whatever they want to do, whether it means they wanted to enter and haven't done it or whatever. They tend to miss it because typically when the market is, it's designed in these corrections to bore you out essentially. So you get so bored, you're not watching the market, you're not watching your charts, and then the market suddenly makes a move, especially in crypto, because these movements can be so fast, right? That you then miss the entire move, and then suddenly, we're suddenly in the next wave 4 already, and then people get bored again, right? And then they switch off again. You know how it is. So it is, however, of course, boring. I would also love to have the market do something more exciting. We haven't really seen much action in recent days, over the last week or so, over the last 10 days. Nothing noteworthy because the prices overall across the entire sector, I mean, it's not even that we have some coins that are interesting. No, actually, they are all moving in a pretty narrow range. There might be some few exceptions, but they are mainly moving in very narrow ranges. So nothing really decisive has happened. We need a bit of a decision move across the sector. Bitcoin needs to lead it. ADA is still below the February the 3rd high, or is it the 4th? I think it's the 3rd, yeah. It's still below this swing high, marked by the green line here at 82.5 cents. I mean, this is the level that needs to be broken to the upside to confirm a more direct upside breakout in the yellow scenario. So what we normally like to see is that in the yellow scenario here, in this diagonal pattern, that the market is moving up more directly, more aggressively, that in a C wave we get an impulse that would be ideal, and then this would confirm further that this yellow scenario is correct. What we don't want to see is a break below the upper micro support, which is located between 68.5 cents and 75 cents. This is Fibonacci support, and there are a couple of other levels to watch, 71 cents and 73. These are relevant because in any B-wave pullback, the market could easily go all the way down to the 78.6 Fib level, but doesn't have to. So these are just essentially 4 levels to watch in this particular scenario. In an alternative scenario, if the market breaks below 68.5 cents, which is still likely, we could still be working on a larger wave 2. Both valid, both likely, because the price hasn't even broken above the February the 3rd high, which is why this could easily be some kind of a high B wave. So we could say in the blue count, this was just an A wave down, a B wave up, and then a C wave down, and we can go from there. But overall, yeah, nothing too exciting here at the moment. These are the two scenarios, which means we have upper micro support, which is relevant for the yellow scenario. Any break below it will indicate that the price could still be in a bullish case, in a bullish scenario, could still follow the bullish roadmap here. And based on the thesis that a larger degree fourth wave bottomed on the 3rd of February, we could still watch for higher prices. But in that case, then, the price has space all the way down to 56.7 cents. Normally, in such a wave 2, we should not have a sustained break below the 78.6 Fib level. Yeah? But then we talk about a different measurement. So upper box measured based on this length of the rally from the 9th of February low, all the way up here to the top on the 11th of Feb. Blue count, it's this rally that we measure. So it's just different ways of measurement depending on the correction, the degree of the correction. This B wave is only correcting the rally from the 9th of Feb, whereas this wave 2 is correcting the rally from the 3rd of February, which is a little bit larger. So the support levels are lower as well. But yeah, that's pretty much it. So until we get a decisive break, a sustained and decisive break above the dotted green line at 82.5 cents, there isn't really anything that is too noteworthy. We're just waiting for the market to complete the correction. I'll, of course, keep you updated. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you check out our main channel, MCO Global. You'll find the link in the description. You can find a lot of different content. What I want to do in one of the next videos, by the way, I want to talk a little bit about my mindset, things that have sort of helped me along my journey from a mindset point of view, things that have made me successful. Again, also, even if it's just in life in general, or to run a business in the financial market. So if that's something that interests you, check it out. Link is in the description. Thank you very much. Bye-bye.